Good morning. Welcome to this Phoenix Blue morning update on Monday, the 6th of June. I'm Tom Colley, and I'll be talking to you this morning about the markets and the news. And news is the big thing. I'm sure we were all aware of the non-farm payroll numbers that came out on Friday. Hugely under the forecast. We were forecast at 159,000 new jobs created. The figure came in at only 38,000, hugely under the forecast. In addition, last month's numbers were revised down from 160,000 to 123. So not only did we have really poor numbers for the previous month, but the month before that, the numbers were even worse. So we'll have a look at that in a little bit more detail in a moment. Things to look out for today if you're looking to trade the Kiwi. Bank holiday in in New Zealand today, so overnight that session will have been extremely quiet. So be aware of that if you're looking at trading that pair or any of the crosses today. Big news today. The Fed chairman, Janet Yellen, speaks at 5:30. It would have been a big speech, but the numbers we've just mentioned on the non-farm payroll will make the focus on this even more intense. How will she respond based on what she said recently, and then some really poor data? What is her response going to be? Is it going to be, oh, this is a one-off? Or is it, and we're still data dependent, or is it going to be more cautious? Okay, before we're on again tomorrow, we also have the Aussie cash rate and the RBA rate statement at around 5:30 tomorrow morning. So back to the NFP announcement. To put it in some sort of context, what I wanted to show you here is this is a chart of non-farm employment change from the period of 2009, which was the net result of the 2007-2008 crisis, when figures clearly reduced. We had an increase, and then we had a period again of reduction. But certainly since 2012, we've had some continuous growth in those numbers. As I say, we've had a really bad figure there. You can see the gold line there is the forecast. Obviously the blue column is how near the forecast got. We can see we've missed the forecast on lots of occasions previously, but that clearly is the biggest miss for a long time. Maybe sort of there around 2014, we've got one miss in that sort of dimension. I've already mentioned last week. The previous month figures were reduced down from 160k, which was below the forecast, which was 203k. So it came in under forecast and then has been substantially reduced to the tune of 37,000. Makes you wonder why they put the data out in the first place. But I also put on here is the unemployment rate. Now, the interesting thing about the unemployment rate is, look, we can see massive declines, even more dramatic than we can see here. So we can clearly see that unemployment has been declining. However, one of the other numbers that came out on Friday was the labour force participation rate. That's for those working plus those looking for work as a percentage of working age Americans. That figure fell to 62.6% from 62.8%. So what that actually suggests is the number of people looking for jobs is decreasing, but not necessarily because they're finding work, because they're giving up the intention to find work, be it because they've simply given up, or maybe they're going into other things like education. Another interesting figure that came out was the share of Americans working part-time because they couldn't find full-time work, and that's a gauge that Janet Yellen has indicated she's watching for signs of remaining slack in the labour market, jumped to its highest since August. So within that, not a lot of good news anywhere. However, still needs to be taken into the context of the overall picture we can see here in respect of US employment. Now, we were looking towards a potential rate hike from the Fed in June. The consensus appears to be that that's definitely going to be off the table unless Janet Yellen suggests something different this afternoon, which could see a complete reversal of all the price action we saw following the NFP figures on Friday. July still remains on the table, but the odds on that are less likely based on those figures and what I've read so far about economists, etc., their views. Anyway, let's have a look at how that actually influenced the markets. We'll start over in the Far East as always. This is the Shanghai Composite, the Chinese equities, and as you can see, not a lot of effect here. We're still in around this level here. We had this bullish move that we couldn't justify for any particular reason last week, and then we've just been holding that level since. More interestingly, over on the US dollar CNY, the US Chinese currency, the Chinese yuan exchange rate, the yuan increased in value inevitably as the dollar dropped, but this morning we've seen, or overnight we've seen a recovery by the dollar relative to the yuan. But bear in mind this is a managed figure, so that's probably just the Chinese authorities bringing a bit more sort of equity back or equality back to that exchange rate. Over on the Nikkei, well, we had an inside day here, but a bullish day. We're still in this triangle, so no definitive direction yet. But interestingly, so far, no risk off selling in that context. Over on the dollar index, well, here's the big move down, always expected if with figures that were that bad. We've come down to this key level here at $94. We'll be looking to see what happens today, whether we see recovery back towards this trend line here, or we have another key area around about 92.50. If, for instance, Janet Yellen comes out very negative and we see some more negative data, if we get a break below this level, then the dollar strength that's been the picture or the potential picture all year, and we've been looking for, as you can see, we haven't seen it yet, but that pendant, we've been waiting for that rate rise. But if price was to close below this level, I would suggest that then we're going to have to change that bias and look to the short side there. Okay, now the only market that really has been open because of the bank holiday in New Zealand overnight other than the Asian markets is the Australian dollar, so I put that in here. We can see this really just indicates how weak the dollar is, the Australian dollar is at the moment, because it failed to, on Friday, offset the devaluation in the US dollar by going long, and has since continued short, even in the into the headwind that is dollar weakness. Over on the yen, well, a picture as we would have expected. We'd seen yen strength through all last week, pending the NFP announcement. We've seen a slight recovery so far this morning. This is somewhat of a key level, and we've seen a lot of talk about Bank of Japan intervention, or them no longer intervening. I think, as I've said before, the intervention is officially no longer to happen following G7 meetings, etc., and agreements there. But the reality is, I believe, unofficial intervention is still likely to take place. For some reason, I've got the Aussie in again there, which wasn't my intention. Okay, but next we'll have a look at the S&P. Like the Nikkei 225, we haven't seen what we might have seen and might have expected to see into the rate hike scenario versus the non-farm figures. We did see a risk-off move, but that's been now returned with the close on Friday back up around the previous day's open. The S&P seems to be uncertain in how it wants to respond to data and potential rate increases. I've mentioned before that potentially anything that looks positive for the US economy, even if that means rate rises that earlier in on the back end of last year would have pushed the value of this index down. Even that could be perceived now as being positive, and we could see a breakout above these levels here, which are the previous all-time highs. Over on gold, we did get the risk-off type scenario increase in the value of gold. We can't actually call that risk-off because we haven't seen the corresponding move on the equities that we'd expect to partner that. So I'll be watching this closely today to see how both this and the equities markets react. While shown here, there's also an hour chart here. We did actually have an entry at this level here. On Friday afternoon we had the big move up, and then we had somewhat of a consolidation that just pipped into our entry there. So we were holding a short position. However, into the close on Friday, price on gold increased again, and we got a very, very strong close into the close of trading on Friday. I have to admit, I personally didn't like the look of that, so when the markets opened on Sunday night, I got out of that trade basically at break even as price just came around my entry at that level there. Other thing to look at today, crude oil. We've been around or just below the 50 level, which is critical. A lot of things potentially affecting oil at the moment. We've had OPEC meetings, etc., etc. But maybe the most significant thing here is price back at this level may bring back on stream production from fracking in the States, which would add to somewhat already oversupply. We've got a rising wedge here. I'm looking for a break below that and 47.70 there, and be looking for price to come back into there to take this back short initially to a target of $42, $44. Okay, that completes everything for today, other than to say that I'm sure Phoenix Blue traders will be aware of this already. We haven't put out a watch list yet this week. The dramatic non-farm figures meant that we wanted to see how they panned out today, particularly after Janet Yellen speaks late on this afternoon. So we will be looking to produce a watch list this evening if and when we've got some sort of confidence that the markets have settled into those figures. Okay, on a general note, this is the Phoenix Blue pure analysis you've been looking at. Clean charts, buy and sell with the institutions, trade with a fundamental bias, commitment of traders analysis, which is our speciality. We also consider seasonal analysis. Allows us to use up to 40 or minimum 40 pip stop losses on major and minor FX pairs. Means you can be more profitable with a smaller number of winners. Now, if you're looking to improve your results, take them to the next level, have a look at our website. We're at phoenixblue.co.uk, or email us direct to info@phoenixblue.co.uk. Okay, guys, that's it for today. We'll look forward to what happened during the day with the speech from Janet Yellen, and we'll be reporting back on that in the morning. Okay, thank you. Take care.